Who will take care of our child with special needs when I'm gone? Not having a good answer to that question is the reason why I started this series of webinars. And my goal for today is to bring each one of you a little closer to having a good answer for yourself and your family. My guest today is Chartered Special Needs Planning Consultant Ryan Platt of a Special Needs Plan out of Charlotte, North Carolina. Ryan, hello, and please tell us a little bit about yourself and your company.
You got it, Keith. And this is thank you for doing these webinars and these educational hangouts. They are super for families. We always hear just amazing things back from folks. So thank you for taking the initiative as a dad to bring this information to other dads and moms and grandparents who have the same questions that you do. So thank you for doing that. But my name is Ryan Platt. We created a company, a Special Needs Plan, 10 years ago to help families answer that question. What do we do? How do we do it? Where do we start so that my child has a secure future and that my other children understand what to do and that they may not have the full responsibility. We want them to live the best life they can as well. And in conjunction with that, make sure that the parents are in a good position to be able to provide that support, especially when we're looking at a lifetime of need, as well as kind of a coordination with those government benefits.
Okay. So, Ryan, we're going to just do a quick, and before we start taking a bunch of questions, we're going to do a quick overview of the Able Act. I know that's one of the things that a lot of people asked about, so I'll let you go ahead and get started with that.
You got it, Keith. Yeah, we did. We ended up when obviously you sent out the webinar information to the masses, to everybody, to all the amazing families we get to serve. A lot of questions already came back, which is super. So thank you, everybody, for sending those questions ahead of time. It really helps us to hopefully organize this material well. Or I have to be honest, it helps Keith organize it well. I'm just here talking. So really, thanks for doing that for Keith. But one of the themes from a number of the question was on the Able Act. And again, just to go over that for 5 minutes, hopefully we'll answer some of the questions that came in within this kind of 5-minute segment to start with. Is just to review the Able Act, like everybody probably knows already, was a law signed into law by President Obama back in basically last almost 1 year to today. And after that point, what happens with the Able Act is because it has to do and it's involved in the tax code, right? That's kind of where it sits because it does impact taxation. It has to go to the IRS or the Treasury Department to finalize the regulation. So once that law got passed by Congress, signed by the president, went to the Treasury Department, so they could really figure out, oh my gosh, how are we going to roll this out? And how is this really going to function and work for families and individuals? And so they came out with their proposed regulations, I believe, last June. And then it opened it up for an open public comment period where individual families could review it and provide suggestions. Again, most of the time it was large organizations like the ARC of the United States, the Autism Society of America, Easter Seals, UCP, kind of those large organizations that deal with individuals with disabilities were really diving into it and saying, okay, this is what we need, or this is what we would like to see adjusted. And so that period ended October 21st this year. So hopefully we will have these final regulations for the Able Act so we know exactly how it's going to work, and then we're going to know exactly how to use it. And each family may very well use the Able Act in a different way, depending on your family situation and depending on your child's situation. Again, when we look at the initial regulation, one of the things that I found from parents was a little bit of a disappointment was that they were under the impression this Able Act was going to replace what's called a special needs trust. And unfortunately, the way that it's designed right now, it's probably not going to do that. And it's probably not going to do that for three main reasons. One is there is a annual funding limit for the account. Right now, that is that tracks the same number as the annual gift tax exclusion, which in 2015 is $14,000. So that's the maximum at one time during a 1 year period that a family could put money into it. So why is that different from a special needs trust? Because a special needs trust, you can put as much as you want into it at any time you want to. So again, when people are looking at funding my child's life of support, many times you're doing that yourself out of your own income while you're alive. So you may not fund that level of support until the day you die. Well, on the day you die, if you have any life insurance or you own a house with any equity in it, and you're leaving all those assets to your child, it's very likely it will be more than $14,000, which means you can't cram it all into an Able Act at that one moment. So therefore, you would still need that special needs trust so that you can put more dollars in it at that one moment, because that's probably going to be the largest moment of funding for helping your child's life of support when you're not here anymore. The other reason for that is right now in the proposed regulations, and we'll see what happens again when it does finalize, and Keith and I will do another one of these webinars for you when everything's finalized so you can stay as up to date as possible with it. But right now, if the account gets up to $100,000 of value, so not contributions, but contributions plus growth, once it reaches $100,000, an individual's SSI, which is supplemental security income, will be suspended, right? So all of a sudden, they will not receive that monthly income anymore. Why is that important? Because for many individuals that might be living in an independent living facility, whether it's supported apartments or a group home or such as either one of those two items, a lot of time, most of the time, I would say all the time, but that's always a dangerous thing to say, is that that income is used by the organization in managing that housing to help pay for those expenses. So once that's gone, what does that mean for that individual? Does that mean the money comes out of the Able account? Is it really allowed to do that? Again, some of these organizations that manage these residential locations, these independent apartments, these group homes, some of them can't take private pay. So all of a sudden, are we in a private pay situation? Does that mean because we're not getting that government income anymore to help fund part of those services? And all of a sudden, is our child going to be in danger there? Those are some of the details that we need to know, not only of the Able Act and using it, but also as your child grows, or maybe they already are in that type of living arrangement. Well, the organization that's managing, we need to understand and make sure, hey, if something happens to government benefits, are you allowed to take private pay, right? Can we still live there, or do we have to move out? That's a question we want to know when we're looking at those housing arrangements as your child develops and ages, or if they're already there. And the other issue that I think about that $100,000 number is, I'm just thinking about how is that really going to function? You know, Keith knows I'm like this. I'm really big on how does this actually work in the moment of actually using it, right? And in everything, that's what you want to think about, right? How is this working on the ground? In the moment I need it, how's it going to work? And I just imagine if an Able account, if this is how it's going to function when it's all said and done, if an Able account gets to $100,000 and all of a sudden it's invested in, I don't know, oil stocks, which we know how well they've done this year, right, everybody? Right? And all of a sudden, now the account's down to $98,000. Well, do they have to go back and apply again? Does SSI already know that their account's down under $100,000? Does it automatically start over again? I just see a lot of issues with getting the information to SSI, confirming that the account's below $100,000, and then having SSI reactivated to start paying the monthly income again. I just see that as a major issue for somebody to figure out if that starts to happen. The third one right now is there's also a Medicaid payback in that Able Act. So what that means is if there's money left in the Able Act or in that Able account, and your child passes away, let's say there was $50,000 in there and your child passes away, right now the regulations or the proposed regulations say that that $50,000, Medicaid will basically add up or look at the services they provided your child, add up the costs and say, okay, well, if that's $50,000 or more, we'll take the $50,000 first to get paid back for the services we provided. Again, in a special needs trust, again, there are different types of special needs trust too, so please be aware of that. But in what's called a third-party special needs trust, there is no payback. There is no limit of how much you can have in there where SSI gets suspended, right? If it's written correctly and it has a certain, and the dollars come from a certain place, then there's no Medicaid payback. You know, there's no limit on the dollars in there. You can fund it at any time with any amount. So there's more flexibility there with it. You know, the old adage that we always want to keep in mind is government benefits are super. They are a lifeline for many of the things that we want for our kids. But we always have to remember, when the government giveth, they usually taketh away something at the same time. And we need to understand what that is. We need to understand both sides of the coin when we're making decisions about our child's future, whether it's government benefits, whether it's tax law, whether it's the trust, or whether it's the Able account. Some other information on the Able, and I'm just reading some of the questions. Sorry, everybody. I want to make sure I hit some of these pieces. You know, one of them was, you know, well, I guess let me give you an idea of where the Able account, I think, right now fits. Again, we'll do another one of these specifically on the Able account for you when it's finalized. So I don't want to necessarily waste too much of your guys' time since it's not totally finalized yet. But one of the things where it works is, you know, especially if your child has the ability to work and they're earning an income, if they're working part-time or maybe, you know, 25 hours a week or 15 or 10, whatever that is, and they're earning an income, you know, in the past, right, the rule is you can't have any more than $2,000 in their name in a checking or savings account or any other kind of account. And once it goes over $2,000, then we lose SSI and Medicaid. Right. And so where this Able account fits is, let's say they are earning money, they're putting it in that checking account. It all of a sudden gets up to $1,900 and we have to go buy, you know, I don't know, you know, the most expensive Nikes on the planet to go walk around in that are $300 to get it down to $1,600. Right. So it's not near 2,000 anymore. Well, instead of playing that spend my money game to keep benefits coming in, right, now all of a sudden this Able account, we could open one up and we could shift that $500, that $900 into that account, because now that's an exempt asset, right? It's basically that's what you want to think about. It's another exempt asset where your child can put their money on a, you know, on a semi-regular basis. If their money's getting above 2,000, that now is not going to count towards that $2,000 asset limit. So now if they have $5,000 in the Able account, but still have $1,000 in their checking or savings, we're okay, right? Benefits are protected. And that's just an amazing use of that account. It's going to have such a fantastic impact on so many adults living with a disability that is just tremendous. So although, you know, I may have deflated you in the beginning, it has, just like everything, it has a great use if we use it in the right way.
Right. And that's really the gist of what you're saying, is that we got to use it in the right way. We got to become knowledgeable about where it serves its purpose. It's not the end all be all of special needs planning. There's a bigger piece to that because, you know, we've talked about in other webinars, the inappropriate use of beneficiary designations and how they could impact either the special needs trust that you have set up or even the Able account that you have set up. If it's not done in the right way, then too much money could flow to an individual and disqualify them for services, which is not what we're trying to do. Right?
Exactly.
So, hey, Ryan, thank you for that quick overview. We're going to take a couple questions here. If we have them, people can type them into the chat. And then I'll pick up a couple that we've already received in from people who have done it. So the goal today, guys, is to answer your questions. We're trying something new here to sort of, you know, make sure we're answering what's important to you guys. So let me take a couple of those right now, and then please be sure to continue just typing them into the chat. Someone asked out of North Carolina, I already have my will, power of attorneys, papers, or power of attorney papers, guardianship papers, living will, and every other legal paper that I can think of. I'm not going to mention the person's name. She said, and my other children will carry out my final wishes. Do they have everything? Do they still need to do a will? I think is what he's getting to.
Yeah, I mean, I think one of the things that I would think about is, one of the things that you didn't mention in your question is, do you have a special needs trust? And what else isn't in there is your daughter is she receiving any of those government benefits like Medicaid? If she's using Medicaid, she may not be on SSI anymore because she may be getting a portion of your Social Security retirement benefit, or your late husband's retirement benefit that you mentioned. And so, depending on the situation, you may, if she's receiving government benefits that are needs-based, that goes back to that $2,000 asset limit. One of the things you may want to consider is adding a special needs trust to your legal portfolio. And the reason for that is, I understand your other children will carry out your wishes. And let me just tell you about a story about that. I have a wonderful family I get to serve. They have 4 children. Their youngest has special needs. They're all adults. And we had the legal papers, we had the financial, the taxes, we had everything put together exactly how we felt it was going to go. And things happen in their other child's life, right? One moved out of the country with her husband and 3 children back to where he lives to do a startup company. And she was their main one. Well, now she lives halfway around the world. She's probably not going to be the best guardian anymore, right? The second one in line, she's getting older too, right? She's in her 50s and she had major health issues. So now she's trying to take care of herself. Her kids are grown, right? And so she wouldn't be able to take care of her brother either, right? And then the third one, who's also an adult in his late 40s, he married, his wife also has a sister with a developmental disability. So now all of a sudden, as life goes along, even though you're 81 years old and your daughter's 55 and you live with, I believe, one of your other daughters and her husband, again, what we want to talk through is what is going to provide your daughter, Susan, the most continual level of care and support necessary for her to be as productive and happy as possible. And that may not always be living with a family member, because that may not always be continual, because we're betting on one person or 2 people where their lives change. So I understand you have all the pieces, or you may have all the pieces, right? Special needs trust might be another one you want to look into, because if you leave Susan any money, and she's getting benefits, if it's more than $2,000, she's going to lose those benefits. If you leave the money to your other children, it puts it in jeopardy of being used for other things, even though you think that would never happen. Or it is up for liability purposes if something happens in their life. If they have a financial issue, they have bankruptcy, one of them gets a divorce, and all of a sudden 50% of the money that you left for them that was supposed to go to your daughter Susan is now going to an ex-spouse, right? One of their children runs somebody over in the middle of the street and kills them, and they get sued along with their child because they're driving the parent's car. I don't know. Right. All sorts of things can happen. But if you leave that money in a special needs trust, it's really protected for your child, for your daughter Susan, and nobody else. So those are a couple things to think about. Special needs trust, if that warrants it for your situation. Second one is, what do we make sure is a continuation of that continual care? And that's a really big conversation to have. It's one of those things that I found, siblings kind of brush aside really quickly. Say, Mom, I'll take care of it. Don't worry about it. Well, the issue is they really might not know all the different pieces that go into it. And when they do, they may want some help. Not necessarily that they want to give that job away, but they might want some help. And how do we talk through that?
Mm-hmm. Carol, I'm not sure where she's from, asked, and this is going to be, what is the cost to set up a special needs trust and or an Able account? Do you want to address that at all? I know it's going to vary from location to location and who you decide to hire, et cetera, but go ahead.
Right. And that's a great question. It does vary. I'll take the Able account first, because that's going to be easier.
Right.
Because we don't know. That's going to be really easy, Carol. We don't know yet. We are not really sure exactly how they're going to be rolled out, but there most likely will not be a cost to set it up. And I absolutely understand your cost question. Very important. The other question that I would have for you is the value question.
Right.
And what I mean by that, and again, you always want to balance cost and value, but here's what I mean. Even when you're talking about an Able account, there are going to be qualifying disability expenses that you can use the money for, that either you need to be aware of or the professional you work with needs to be aware of. I'd be very weary of going to the bank and just setting one up, or setting one up with someone who doesn't understand the disability side and the government benefit side, so that you never get in trouble, right? And for that expertise, there might be a cost. And it goes back to the same idea of, if all of a sudden, you found out, you had this very rare type of cancer and this very rare type of tumor that needed a specific surgeon to go take it out. Would the question you ask be, how much is this going to cost? Right. Or would the question you ask, who does this, who does it a lot, and who does it well? Right. Those should be the first three questions you ask. And then you talk to them, see how you feel about them, and then get into the cost conversation. Because Keith, as you said, it does vary from different parts of the country. Even within parts of the country, I would argue that some people charge too much for it. But that's their decision and their client's decision to pay for it.
Right. Okay, let's see here. Let me pull up another question here, Ryan. This is Lee out of Wisconsin. I think WI is Wisconsin. Sorry about my geography is not good. I must have not passed that class. He asked, my adult son has a special needs trust which will soon have monies in it from his grandmother's estate. Can you explain what assets are allowable to purchase with the trust monies? I had heard it was a home, if they live in it, a car, and a burial plot. Is this correct? And if that information is correct, what are the regulations for owning a car, or where would I find that information? Also, if purchasing a burial plot, can a prepaid funeral also be purchased at the same time? Thank you for that question, Lee. That was multi questions in one.
Yeah, thanks, Lee. You're going to keep us going for a little while. We appreciate it. Good question. So I'm going to take that back a couple places here. So we have a question there about mom's estate or grandma's estate. Money's going into the special needs trust. How the heck do I use that money? Right. So questions around housing, transportation, future funeral, all fantastic questions. One of the things that we might be thinking about when you think about a trust, because you mentioned these all in the same question, which is great. You mentioned a home, you mentioned a car, and you mentioned a burial plot. Those three things are exempt from that $2,000 number when qualifying for Medicaid, right? So an individual can own a house in their own name. They can own a car in their own name. They can own a prepaid funeral burial plot program in their own name. And if they're all worth more than $2,000, that's okay, right? So they could own that outside the trust and be okay. Now, here's the caveat to that, right? Let's say your child with the special needs owns a house in their name because they can and still qualify for Medicaid.
Right.
However, they're getting SSI as well, most likely, and the Medicaid services. So now all of a sudden, you can't use money from the trust to pay for house expenses like property taxes, homeowners insurance, those types of things that are part of owning that piece of property in that house. Because if you do that, they deem that as income to your child. So now all of a sudden we lose the SSI because we get too high of income, depending on where you live and what the property taxes are. And then all of a sudden we can have too high of an income as well, because that's all going to be deemed income for Medicaid and SSI qualification purposes. So with all that said, if your child's going to live in it, or to be honest with you, even if they're not, their special needs trust can own a home.
Mm-hmm.
Right? They could own any home. They could own 70 rental properties in a special needs trust.
Right.
Let's say you're a real estate mogul,
mm-hmm.
right? And you want to have 2 or 3 or 4 apartment complexes that you own to provide income for your child for their lifetime.
Mm-hmm.
Well, you could put those in a special needs trust because they're not owned by your child. Now, the income is going to get taxed pretty heavily inside of a special needs trust. That'll be another conversation, but that's an option, right? Or if your child's going to live in the home, this is more likely. Unfortunately, we're not all real estate moguls, but but a lot of us have a house, and we may leave that house, or we may say, you know what, maybe later in life we sell that house and we buy a small condo, and that's where we're going to have our child live. Maybe that can be owned by the special needs trust, and then the other dollars inside the special needs trust could then pay for property taxes, homeowners insurance, maintenance, repairs, a lawnmower, a person to weed the beds, cut the bushes, all that stuff that's house maintenance. Mm-hmm. Now, because the house is owned by the trust can pay for it because it's all inside that umbrella. Right. So it never goes out to your child. There's no money that kind of leaves the trust umbrella to hit your child's hands that would cause an income issue for SSI or Medicaid. So therefore, you could do that's the way that you could do it. Even though your child is allowed to own a house mm-hmm. and still qualify for Medicaid, you really can't, because they're not really able to manage it with money from the trust, right, on an annual or monthly basis, and not impact their benefit programs. So if that's the situation, you really kind of want the trust to own it, and then the trust can really pay for anything it wants to that has to do with the house and not impact your child's benefits. Yeah, but burial plot they can actually own on their own, or you could own it. You could own it inside the trust. You could use trust money to buy that outright, which is fine. You can do that too. You can use trust money to buy a car. Really, the biggest thing that you can't use trust money for is a lot of housing expenses and like groceries and food, right? Those are kind of the 2 things that become a little bit shaky to use trust money on and not impact benefits.
Right. Okay. Thanks, Ryan. Let's see. This is coming from Linda out of Charlotte as well. Do I need a will if I have an estate plan set up? How much will it cost to make an estate plan that includes providing for my special needs child?
Good question, Linda. So 2 things on that. I'm not sure. And this is the one challenging part about doing this kind of a question and answer webinar without the person there, so I can clarify the question, because for a lot of people, their definition of estate plan might be different than mine, right? When I think of an estate plan, I think of that the will is a part of the estate plan.
Right.
So the estate plan would be a bigger umbrella, and all the legal documents that you need would be under it, and one of those documents is a will. Right, because the will is going to tell the court system who you want to administer your wishes, where you want your stuff to go and where you want your people to go, right? So who's going to be the next guardian? Is it going into a special needs trust? And so that should all be part of the, now again, for me, when I think of an estate plan, a lot of people think it's just legal documents. When I think about it, it's, again, my definition is much broader. It goes into exactly what you were mentioning, Linda, is, well, how do I know, what the amount is to provide for my child, even within the estate plan? So the estate plan should go to that depth of saying, well, this is the environment I want my child to be in. This is where I want them to be. This would be the cost of it. This is how much government benefits will provide. And therefore, the difference is what I have to fund, right? And then it's deciding, well, how do I fund that? And then what legal instruments do I need as part of my estate plan to ensure that that gets funded appropriately? What financial pieces do I need as part of my estate plan to ensure that that gets funded appropriately? So again, the legal documents are, kind of like the woman earlier mentioned in her question: will, living will, healthcare powers of attorney, durable powers of attorney, guardianship papers, special needs trusts, regular trusts if you have other children, especially if they're under the age of 18. Those are kind of the legal documents. On the financial side, you may have a house, you may have life insurance, you may have investments, you may have an IRA, just the, real estate. You just may have different things there that all need to be part of that estate plan. How much does it cost? Terrible, but my answer is going to be depends. I know it's terrible, guys. I apologize for that. But it really depends on the area of the country and the depth of planning that your family needs, right? Some families have a different level of planning than others, right? You may have that real estate mogul, right? You might have somebody that has 3 or 4 different companies, or they may have a family business where one child works in the business, another child doesn't, and another has special needs. Well, how does that work? You may just, you may have a family where you work 30 years at a company, you have a pension, and you have a, small retirement plan. Well, that's a different level of detailed planning than the other 2 would need. And therefore, the costs are usually commensurate with the amount of time and detail necessary to complete an appropriate plan for you.
You specialize in, you went and got the designation as a chartered special needs planning consultant, which means you took an additional courses and training that pertains specifically to special needs planning because you're committed to that whole area. So let's see here. Here's a question that came up. And are there job employments for people? Is there things for kids with disabilities after they, what happens to kids when they're no longer in school type of thing? Is that something you want to address?
Sure, absolutely. There are usually organizations in your area. So for Cornelius, there are certainly different companies in the area, in that area of North Carolina that, help with trying to find work for individuals that have a disability. And again, this is also one of the organizations I'm going to mention is also in multiple states, and it's called vocational rehab or vocational rehabilitation. And so a lot of adults with disabilities, when they leave school, will meet with vocational rehabilitation to see if they are if they fit for their organization, and then that organization will help them get connected to other organizations that will provide kind of what's called supportive employment, right? And supportive employment is basically they have a job coach, and so if they're on the job, this individual will stay with them one-on-one until they understand and are able to do their job by themselves and do it in a diligent and efficient manner. And then what's easier for the businesses who decide to hire these individuals with a disability is that, okay, well, my training cost isn't very high because it's being provided already by supported employment, which is provided by it's really kind of underneath the Medicaid umbrella, if you want to say, but it's provided by government benefits. Mm-hmm. So another reason why you may want to have government benefits is for some of that, employment services and that services help. Linda, we certainly know some companies in the North Carolina area. If you want to email us, we can kind of send you a list that you may want to contact.
Okay. This one's from Quebec, Canada. I'm not sure you're gonna be able to answer it since it's not in our country, but they ask, will an RDSP affect my child's benefits in Quebec?
Right. So this is going to be a little more difficult for me. So it's good. The RDSP is what's called the Registered Disability Savings Plan, and I
am impressed by you knowing what that is in a different language. Yeah. That's awesome.
Well, I please don't take this as pure gospel. Janie, I think Janie is, or I'm not sure maybe who asked it, but Carrie, please don't take this as pure gospel. I haven't had a lot of experience with it. However, it's almost similar to kind of the Able account that is coming out in the United States. And so an individual with a disability can only have one of these up in Canada. They have to be under the age of 59 and a half. They can't open it after that period of time. They can use it for a lot of different items. And even if they have money in there, they'll be able to keep their benefits that are in Canada. However, when there's income generated from that savings account, they will have to pay income tax on it, but it'll be especially if they take it out, but it'll be at their income tax rate. So that's, I'll be happy to learn a little bit more about it for you, but that's kind of the about as much as I know on that one.
Ryan, I'm impressed. Now, I have to say, everyone who Ryan and I have been surprised by the breadth and reach that these webinars have had. I've had people from Bermuda, from Greece, from India, from Quebec, as you can see, all over the world who have the same issues that we do as parents with kids with disabilities. So that's why we get questions that are from not in the United States. We're here to help support people who have kids with disabilities, I think really is what our mission is. We have a question here from Monica. And I'm not sure where Monica's from, maybe here in California. Are there any limitations as far as what funds a special needs trust? Grandma and grandpa want to use their retirement money to fund the special needs trust.
Great question. So the first answer is no. There is really nothing that you can't use to fund a special needs trust. Now, I'm going to say that with a caveat. A third-party trust can only be funded with people's money other than your child's. And that may seem silly to some of you and say, well, my child doesn't have any money, so they're not putting any in anyway.
Right.
But it could be a situation where the disability may have occurred from an injury, right? It could be a birth injury. It could be a toddler injury. There could have been an accident where there was a lawsuit and there was a settlement. Well, so all of a sudden now your question of, is there anything that can't fund a special needs trust comes into play, because then it's, well, which special needs trust do we use? So if there is a situation where it's your child's money due to any factor at all, then it has to go into what's called a first party special needs trust. So everybody else's money, grandparents, aunts, uncles, mom and dad, goes into a third party trust, and you never want to mix the two. And we can go into that at another time. I want to get back to Monica's question. So other than that, you can fund a special needs trust with any account you want. It can be a retirement account. It can be life insurance. It can be investments. It can be real estate, as we said before. The one thing we want to understand is how are each one of those going to be taxed when it goes into the special needs trust? So yes, you can fund it with anything you want. The question is, how is that money going to be treated while it's there, and will you get it out, or will it, no, not you, but will your child get it out for their benefit without it being decimated by our tax system? Because again, the tax brackets work differently inside of trusts than they work for us as individuals. So those tax brackets are very compressed, meaning the top rate is the same, 39.6%. But as individuals, we have to make about $400,000 before we hit that number. As a couple, you have to make over $450,000. Well, in a trust, you have to make $12,000, a little bit over. Right. So all of a sudden now, so when you think about retirement accounts, you can certainly fund it with that. What I would propose is you talk to somebody who does this all the time, because retirement accounts, depending on what kind of retirement account it is, maybe it's a traditional IRA or a 401k. Those have never been taxed yet, right? You put in pre-tax money, it grows tax deferred, and when you take it out, it's taxed. Well, when that kind of an account is inherited, the rules change again. And when it's inherited into a special needs trust, it has to come out of that kind of an account, at least right now, at least within the first 5 years of inheriting that money. And all of it's going to be taxed. And to be safe with government benefits, it should be taxed at the trust tax rates.
Right.
Which therefore could all of a sudden, depending on the amount, you could lose somewhere between 40 to 50% of that value in there. So the question is, the quick answer is no. You can use any account you want to fund it. The more detailed answer is, are there better ones than others? Yes. And are there ways to, I don't know if this is the right term, because it's probably going to be taken incorrectly, so I apologize. So just don't do anything with what I'm about to tell you. Is, can you turn those other accounts that aren't as good to put in a special needs trust and transfer them into something else, and then leave it to the special needs trust to reduce the overall taxation and get more money for your child? And you know what? Grandma and grandpa can do that with the proper direction.
Right. And I think that's really what you're saying here, Ryan. I mean, we talked briefly about it earlier, is that you wouldn't hire a heart surgeon to do brain surgery. So you should work with someone who specializes in special needs planning to sort of walk through all the little nuances of the things that could be done and the best way to do it. I mean, when I saw the compressed tax rate of a special needs trust at nearly 50%, that defeats the whole purpose of putting money aside for your child, because half of it's going to go away in taxes if you do the wrong kinds of assets in there. So I had some initial ideas of what I wanted to do, and after talking with you, you are all probably not a good idea. There's better ways to do that. And we're going to get close to wrapping up now, because I try to keep our webinars about 40-45 minutes, and we're about at that mark. So if you have any questions, please ask them soon. And I'll let you know that we have another webinar coming up on January 22nd. We're going to be doing this again regularly, so that we can keep you up to date. And please be sure to ask questions. That's what makes these webinars useful, helpful, so that we know about it. I will be sure to give everybody Ryan Platt's email address as part of this, so you'll be able to get in contact with him. Anything else you want to wrap up with, Ryan?
Yeah, I would just ask everybody, if you feel like these webinars are giving you guys solid information, Keith and I's goal is to give you guys the information you want, so that you come here and you leave with your questions answered as best as we can in this kind of a format. That's our simple goal. Our goal is to make sure when you come here, you leave with the information that you wanted to receive. And that's one of the reasons why we decided to do the question and answer. And you know what? Every parent, because we get to see all the questions, there's common themes, guys. And so what I would say is, everybody because you hang out with other parents and other families, if this has given you value, I mean, Keith and I don't make any money on this, everybody, right? But if it's given you value, That's awesome for us. And it's awesome for you, but it's not awesome for your friend who didn't know about it.
Right.
So please share it through your entire social media outlet, because even though all your friends on Facebook and Instagram and LinkedIn don't have children with special needs, they might have a friend that does. So
right.
Throw it out there for us. If you're not getting value, don't tell anybody. Right? Say this thing's dumb.
No,
right?
no. Tell us why they're not getting value. And
right. Well, that's true too. Yeah, please tell us why you're not getting value, and we'll adjust. Right. And so, throw it out there to everybody. When you get our emails that say we're doing a webinar, do a forward and send it to everybody in your email list. It's just like, hey, we love that new Star Wars movie. Let me tell everybody about it.
Right.
Right. It's again, we just want to make sure that that your child's taken care of.
That we're taking. That's it, Ron. When you and I met about a year or so ago, you told me that your mission for your company was to reach 1 million families. And through the technology that we have available, we are reaching people throughout the world. I think that's just tremendous. And for me, when I woke up in the middle of the night that one time where I was like, oh my gosh, what happens if something were to happen to me tonight to my kid? And I didn't have an answer for it, which is when I called you a year or so ago saying, hey, Ryan, I don't have an answer to this. Can you help me? And we had our first webinar back in January of 14, I think it was. Yeah. That's where it all started. So anyhow, I appreciate you letting people know about that. So everyone, we're going to wrap up today's episode because we try to keep it to this thing. So the next steps is that I'm going to send everybody a link that has this webinar that you can watch that we just did just now. And then I'll also create a YouTube version. If you have time, go ahead. We've covered webinars on guardianship, how to fund a special needs trust, to various topics on our YouTube channel. So you can go there and watch some of those because they're helpful. They're all related. You'll be very informed about it. And if you like what you see, comment on it and like it, give it a thumbs up, whatever medium you're using. We really appreciate that. So thank you everyone for joining us. Hopefully we got to most everybody's questions. If you have some, feel free to continue just to send them in and we'll get to them on our next webinar, which is January 22nd. So you'll be receiving something from us pretty soon with registration information as well. All right, everybody. Thank you very much and have a great